Good evening, and welcome to the AJP Northeast Asia Market Close. The record-breaking rally across Asia finally slowed on Friday, as investors shifted from chasing momentum to choosing winners more carefully after days of extraordinary gains. South Korean equities paused after repeatedly rewriting history this month. The benchmark KOSPI slipped 0.16% to 9,049.03, holding above the 9,000 level despite heavy profit-taking after its recent record-breaking run. The junior KOSDAQ underperformed sharply, falling 3.43% to 966.64 as investors rotated away from smaller growth stocks. Earlier this week, hopes for easing tensions between the United States and Iran, falling oil prices, and another surge in global technology shares pushed markets across Northeast Asia to record territory. By Friday, however, investors turned more cautious as follow-up diplomatic efforts showed little immediate progress, prompting profit-taking after days of rapid gains. Oil prices steadied and the dollar firmed, encouraging a more selective approach to risk assets. Yet the market's core theme remained intact: artificial intelligence. Samsung Electronics fell 2.34% to 354,001 as investors locked in profits following its recent rally. In contrast, SK hynix climbed 2.94% to 2,764,001 after touching another record high earlier in the session, showing continued conviction in high-bandwidth memory and AI infrastructure demand. SK Square gained 4.71% to 1,780,000 won, extending its advance as investors continued seeking exposure to AI and next-generation growth themes. SpaceX's blockbuster Nasdaq debut also remained in focus. Although South Korean retail investors were shut out after shares originally earmarked for Mirai asset securities were withdrawn in the final allocation process, the company's rapid rise reinforced market attention toward AI, aerospace, and advanced manufacturing. That focus helped sustain buying in Korea's technology ecosystem despite broader market consolidation. Mainland Chinese markets were closed Friday for the Dragon Boat Festival. Investors instead looked back at Thursday's trading, when the Shanghai Composite slipped 0.43% to 4,090.48, reflecting a cautious mood amid profit-taking in large-cap shares. Yet beneath the weaker headline index, money continued flowing aggressively into selective growth sectors. Zhuzhou Yigui surged 20.01% to 67.9 yuan, while Jingshengkou jumped 20.01% to 80.44 yuan. Jinbokou also rose 20% to 59.75 yuan. The strong gains suggested investors remain willing to pay for companies tied to advanced materials, specialized manufacturing, and emerging technology, even as broader market sentiment softens. China's market this week has increasingly become a story of narrow leadership. Selective growth stocks continue climbing, while the broader index struggles to keep pace. Japan's market told a similar story. The Nikkei 225 slipped just 0.05% to 71,016.54 after briefly trading near record territory earlier in the week. Investors remained optimistic about artificial intelligence and semiconductor demand, but increasingly selective about where to place their bets. Advantest, one of the world's leading semiconductor testing equipment makers, rose 3.13% to 30,340 yen, as investors maintained confidence in AI-driven chip demand. But not every semiconductor stock joined the rally. Lasertec fell 3.37% to 46,670 yen, as investors locked in profits after a spectacular run. Financials also weakened. Mitsubishi UFJ Financial Group declined 2.87% to 3,277 yen, suggesting that even after the Bank of Japan's recent rate increase to 1%, investors remain focused on growth sectors rather than traditional beneficiaries of higher interest rates. Friday's trading showed that Asia's rally has not ended. Instead, investors are becoming far more selective after a historic surge. Artificial intelligence remains the dominant theme. But rather than buying everything, investors are concentrating on the companies they believe will define the next phase of growth. The question now is whether that selective optimism will be enough to sustain markets through the second half of the year. We will be back next week with another look at Northeast Asia's markets and the forces shaping them. Thank you for watching, AJP.